Two Nobel Prize winners once ignored their own trading rules and lost $4.6 billion in just 4 months. If the smartest people in finance can't survive breaking their rules, what makes you think you can? There's one thing, just one, that separates traders who win consistently from traders who eventually blow up: a system and the discipline to follow it every single time. Not 90%, not most of the time, 100%, or you might as well not have a system at all. Let me ask you something. Why do most retail traders lose? Is it because they're dumb? No. Is it because they don't work hard? Absolutely not. Is it because they lack access to profitable strategies? Also no. YouTube is full of them. They lose for one simple reason. They don't follow their system. Or worse, they have a system but abandon it the moment emotions kick in. Here's how it usually happens. Someone learns a strategy, tests it, even sees it work. Then they take a real trade, money on the line, and suddenly their rules evaporate. This setup is different. My gut says stay in. I'll move the stop just a little. This has to reverse. In that moment, they stop trading and start gambling. Think of casinos. Casinos lose individual hands all the time, but they follow their mathematical edge with ruthless consistency. Every spin, every hand, every hour. They never change the rules because someone feels lucky. That's why casinos always win long term. As a trader, you must become the casino. Your edge is your system. Your discipline delivers the profits. Break your rules even once, and you become the gambler on the other side of the table. And the gambler always loses. What a real trading system actually includes. A real system is not, it looks good or I have a feeling. A real system has 4 strict pillars. 1. Entry rules. Mechanical, objective, no interpretation. 2. Exit rules. Stop loss and target defined before you enter. 3. Position. Sizing. Fixed risk per trade every time. 4. Trade management. Trailing stops, partial exits, all decided up front. Miss even one? You don't have a system. You have preferences that collapse under stress. The most expensive lesson in trading history. In 1994, a hedge fund called Long-Term Capital Management, LTCM, was born. Their team was like the Avengers of finance, a legendary Wall Street trader, 2 future Nobel Prize winners, a former Fed vice chairman, and a squad of mathematical geniuses. Their strategy? Sophisticated arbitrage, mathematically guaranteed price convergences. And it worked brilliantly. Year after year, they delivered huge returns. They grew to $4.8 billion under management. They leveraged it 25 to 1, controlling more than $120 billion in positions. But everything depended on one thing: following their risk rules. In 1998, Russia defaulted on its debt. Markets panicked, spreads widened instead of tightening, and LTCM's positions went against them. Their model said everything would eventually normalize. And maybe they would have been right, but they had broken their own rule. They were over-leveraged, far beyond their limits. Their confidence blinded them. They convinced themselves, this time is different. Margin calls hit. Positions spiraled. Competitors traded against them. In 4 months, they lost $4.6 billion. Not because their math was bad, not because they were stupid, but because they ignored their system. The collapse was so catastrophic that the Federal Reserve had to arrange a $3.6 billion emergency bailout to stop a global financial meltdown. If they couldn't survive breaking their rules, why would you? The real cost of breaking your rules. 1. The financial cost. The obvious loss when a trade goes wrong. 2. The psychological cost. Worse than money. When you break rules, you destroy the ability to learn. Lose? You blame the system instead of yourself. Win? You reinforce terrible habits. 3. The opportunity cost. Every bad trade blocks you from taking a good one. 4. The compounding cost. A system with a positive edge only works if you follow it every time. Break your rules 20 to 30% of the time, and your edge mathematically disappears. How to build iron discipline. Step 1. Deep back testing. You can't trust a system you haven't proven. Step 2. Forward testing. With no money, build the habit of following rules before going live. Step 3. Pre-trade checklist. A simple physical checklist prevents emotional decisions. Step 4. Journal discipline, not just P and L track. Whether you followed rules because discipline determines profitability. Step 5. Redefine success. Success is not making money today. Success is obeying your system perfectly for 100 trades straight. The identity shift. You're not a trader. You're a system executor. You don't decide. Your system decides. You just follow. You don't celebrate wins. Your system earns the credit. You just executed. You don't blame losses. Losses are built into the system. You just followed the plan. Your judgment is the enemy. Your emotions are unreliable. Your discipline is the edge. What real, sustainable profitability looks like. It's boring. It's repetitive. It's consistent. You check your charts. You take only the setups that qualify. You set your stop and target. You walk away. Win or lose, you log it. Then you repeat. After 100 trades, your equity curve rises. Not because you're a genius, but because you followed your edge with machine-like consistency. That's real trading. Final truth. LTCM had the world's smartest minds, ironclad models, and unlimited resources. But one thing destroyed them, breaking their own rules. If they couldn't survive that mistake, you won't either. In trading, there are only two types of people, system executors and gamblers. Only one group survives.